Hello everybody, welcome back to my channel, Trading Secrets. This channel is for entertainment purposes only, and for those of you who do not know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law, and through this channel I'll be providing some stock analysis and also a short trading lesson at the end, so please stay tuned. In the previous video we did a stock analysis and update for ticker symbol MMAT, where we looked at a potential valuation for the dividend and also another new rumour for a potential squeeze. So please refer back to the previous video for update on ticker symbol MMAT. So today's stock analysis is for ticker symbol OCGN Ocugen. This is a stock that has been featured a few times on this channel. It's a stock that I have reinvested in, and we're going to look at some positive news for this in today's stock analysis. Let's start by having a look at the 1 year chart for ticker symbol OCGN. You'll see here on the chart, certainly around about September, October, November 2020, this is a relatively unknown penny stock trading well below $1 and with a 52-week low of 0.18 cents. What's happened just prior to January 2021, the stock has spiked up quite considerably, and it's benefited from development of a potential vaccine for COVID-19. Then on the chart you can see from January 2021 the initial first spike was well in excess of $15. So this is a stock that I have traded on a number of occasions, taking profit. Previous time I sold this stock just in excess of $12. I'm currently invested right now just above $6, and right now it's the chart is looking as though it's set up nicely for another squeeze up, and one of the key reasons for that is potentially there is going to be some good news. Let's first of all look at the reason why the stock went down quite significantly just a few weeks ago. So this is a quotation from Dr. Shankar Masoni, who is the chairman of the board and the co-founder of Ocugen. So what he said is, we're close to finalizing our EU application for submission. We received a recommendation from the FDA to pursue a BLA path. That's going to extend our timeline, and we are, however, committed to bringing co-vaccine. So the key headline there is extending the timeline. So that's what initially drove the share price down. However, there have been some positive developments. Let's start to have a look at them now. Let's start by having a look at a headline here dated June the 30th, 2021, and the headline here is Covaxin neutralizes both Alpha and Delta variants of COVID-19, top US medical research body. So good news there, good news, good headline. Not all of the vaccines are as successful at neutralizing the different variations, but we have certainly good news here with regard to our stock. Let's follow this up by looking at a news article dated July the 3rd, 2021 from India News, and the headline here is Covaxin's efficacy result will help in getting the World Health Organization's approval, says the government expert body chief. So again, a very strong positive headline there. India's first indigenously developed vaccine, Covaxin, has demonstrated an efficacy rate of 77.8% against COVID-19 and 93.4% against the severe disease. So an excellent headline here. Let's see what else we can find. In terms of what's happened, we can see here that phase 3 trials were carried out in 130 symptomatic COVID-19 cases in 25 sites across the country. So based on the results, at least 2 weeks after administration of the second dose, the company has concluded that its jab is offering 63.6% protection against asymptomatic disease, 65.2% protection against the SARS-CoV-2 B1.672 Delta variant as well. So the chairman has said the approval from the WHO will bring visibility to India in terms of this vaccine. So positive news here, certainly for Ocugen. Let's have a look at a tweet here from the CEO and co-founder of Advait, and what he said here on his tweet is the only controlled clinical trial in the world to show effectiveness against Delta variant via a traditional vaccine approach. So certainly this is groundbreaking, this is certainly unique, so it's a positive announcement. And what Bharat Biotech International Limited have said, that this is now being proven to be safe in the largest efficacy trial, final phase 3 in terms of this trial. So print data is now published on the link there available through the tweet. Let's finish off now by having a look at the 1 year chart again. And what you'll see again in terms of a pattern is lots of volatility, certainly from January and February onwards. Whenever we see a significant spike up in the share price, it always comes down. So this has happened on 2 to 3 occasions, and what we're going to see now, in my opinion, is possibly another significant spike up. However, the main catalyst that everybody is waiting for is FDA approval and rollout in the USA. So once that happens, my prediction is for this stock to hit in excess of $20. I do believe that will happen. The only question is when, how long, and what's the process left to get there. So the good news does keep coming. However, there is always some risks involved with this stock, because whenever you're dealing with a medical stock, a small hiccup will lead to a significant fall in the price, and that's one of the reasons why I've always taken profit in here. However, at the moment I'm still holding, and with the potential to possibly take profit as the momentum builds up. In terms of a strike price to finish off, it was $7.29. On the Friday it was down quite significantly. However, in the after hours, I think it was up in excess of 13%. So it's going to be trading on the Monday, I think, possibly close to $8. So certainly, I think if you can catch this below $8, $7.45, $7.50 around that time, and include a stop loss, I think this would certainly be a good stock to add to your watch list. It's now time for lesson of the day, lesson 79. We're going to look at what is a stop loss and should I use a stop loss. So let's have a look at the general advice that we can share here. So stop loss is basically a price that you automatically sell or buy shares whenever it reaches a certain price that you will set yourself. So stop loss is a form of protection against sudden price fluctuations. For long-term investments, they're not really necessarily. So certainly if the stock you're going to hold long-term, like Amazon or maybe a Tesla, that kind of thing, then you don't really need to worry too much about fluctuations, especially if you're holding it long-term, because the big solid companies usually recover, especially Apple, Amazon, Google, etc. So from a personal point of view, what I do is I usually have, when I decide to use a stop loss, it's around about 12 to 15% below the buy price. And then what can happen is suddenly if the price collapses, or let's say it goes down, then obviously you have some form of protection. However, what I also do is, let's say if the price goes up, let's say the price has gone up, as soon as I've invested, it's gone up 20%, my stop loss is below my buy price, but now the price has gone up 20%. What I personally do is then I move my stop loss up higher. So for example, if the price goes up 20%, whatever my initial stop loss is, I would probably move that up by 10 to 15%. And the benefit of that is that guarantees you profit if the stock crashes down, so you don't have to sell at a loss, you can still sell at a profit. So it's not a good idea also to use a stop loss that is very, very close to your buy price. One of the reasons for that is natural for all shares to have a little bit of fluctuation, and these movements have to be allowed. So if your stop loss is very close to your buy price is going to cash out, you're going to lose your investment in there, and you'll have to rebuy and pay the charges and possibly miss out on a spike up in the price. Thank you very much for joining me. I hope that helps. Please stay tuned.